Supply chains are built on two things, efficiency and economics. Capacity is getting tighter, rates are going up. Our job is to make sure our capability gaps are zero. India are in a very good position to capitalize and benefit from the shifting sands of global trade. Our formula in the focus strategy is P plus Q equals G.
Were there any underlying trends in global trade that really surprised you?
The two I'll give you straight off the bat.
Global trade withstands tariff turbulence, says a latest report prepared and released by the global logistic giant DHL in partnership with New York University's Stern School of Business. According to the DHL Global Connectedness Tracker 2025 special update, despite tariffs, geopolitical frictions, and talk of de-globalization, global supply chains are holding steady. The report says that in the first half of 2025, global trade grew faster than in any half year since 2010, excluding the pandemic rebound. This is quite contrary to the popular perception of doom and gloom in global trade in the wake of tariffs and geopolitical unrest. The report just released offers a first systematic look at shifts in global business amid trade policy turbulence. The report is based on analyzing more than 20 million data points on international flows of trade, capital, information, and people. Interestingly, the DHL Global Connectedness Tracker 2025 special update comes out on a day when the International Monetary Fund chief downplayed the impact of trade and tariff war. Higher US tariffs have so far had smaller impact globally than expected, but it would be premature and incorrect to conclude they have had no effect on economic growth, the IMF said. The IMF expects the world economy to grow 3.2% in 2025, up from its July forecast of 3%, but decisively below the pre-pandemic average of 3.7%. With me today to unpack the key insights from the DHL Global Connectedness Tracker 2025 special update and explore how ready the logistic industry is to navigate the shifting winds of global trade is John Pearson, CEO of DHL Express. Pearson, very pleased to have you join us for this interaction.
I'm just as pleased as you are to be here and to be with your viewers and your listeners and have a good discussion. So I'm looking forward to it.
Pearson, what in your view is the most significant takeaway from this report? Were there any underlying trends in global trade that really surprised you?
Yeah, I think there was a lot of takeouts, and it was quite an encouraging scorecard if you want to summarize it like that. I think to kick our discussion off, the two I'd give you straight off the bat would be I'd give you the fact that trade in the first half of this year, that's January 1 to the end of June, grew faster than any 6 months in the prior 15 years, apart from one particular spike during the pandemic. That surprised a lot of people. Most people might have thought that trade would be down, reinforcing the level of globalization and how strong trade is. And the second one I would give you, and we can talk more on why that first KPI was there. And the second one I give you, and it's particularly pleasing to say it, I said similar things to the listeners in India last week, but here I'm in South Africa today. But it's empirically correct that Sub-Saharan Africa was the fastest growing region in the first half of this year in terms of trade value growth, and that was pip over 10% from memory. So and is forecast to, and the third one I would say in fact is that trade is forecasted to grow at roughly the same period over the next 4 to 5 years as it did in the prior 10 years. So for those interested in global trade, you can take quite a steady trajectory in terms of the outlook. For those interested in surprises and surprises within surprises, you can take the fact that the first half of the year grew faster than any in the last 15. And for those that are on the great continent of Sub-Saharan Africa, where I sit today, they can take some comfort the fact that maybe the Africa Free Trade Agreement is starting to work. Intra-regional trade is higher than it has been in the past. That was one takeout. And that sub-Saharan African trade is absolutely at the top of the podium in terms of speed of growth. So I think I'll give you those four things as perhaps the highlights or the main takeaways from the report. I would add another, if you're willing me to allowing me to comment one further. It wasn't a surprise that trade between China and US is, let's say, at an all-time low. Lower than it was. I think we're down to about 9% of US imports come from China. I think it was 22% in 2017, broadly speaking, those numbers. But that should be no surprise to anyone. I would rather focus on the 219 countries that are embracing trade and looking for more deals, and where sales teams and marketing officers are looking to find new companies and new countries to sell to. And that, within the numbers that we can see, is absolutely what is happening out there.
Pearson, for quite some time, even before the new US administration came into the office, we've been hearing about friendshoring, nearshoring, regional blocks, regionalisation, trading with the countries with a similar ideology. Do you think that's kind of, we have overstretched those topics and that do not have empirical data to support?
Yeah, I think there's a little bit of faddism there. Lots of buzzwords that mean something but maybe don't mean very much. I think the one, and maybe I'd preface this comment by saying that during the Icelandic ash cloud crisis, which wasn't just a meteorological event, it was when no plane, apart from DHL planes actually, flew above the skies of Europe for about 30 days. It was quite a supply chain crisis, and everyone said they're going to move everything closer to home. What actually happened? Not very much. Then we had the pandemic, and people said the same thing, and what actually happened? Not very much. I think again, pointing to the data of the Global Connectedness Tracker, and I sort of really applause NYU Stone because it's always back to the data points. The real data point that you can talk to on terms of nearshoring, forget onshoring and the others, is Chinese manufacturing in northern Mexico, pushing goods and product north across the border to the US. I think that's happened, but in contrast, or in support that that's not happening very much more than that example, the average distance that global trade travels is, give or take a few hundred kilometers, 5,000 kilometers. Now, if some of these trends were as strong as people make them out to be, pure math would say that 5,000 would come to 4,000 or 3,000 or 2,000. So two things from that. One is that globalization is not giving way to regionalization, or you can say it another way, things are not necessarily being made on the doorstep of the people that are consuming them, with the exception maybe of Chinese companies settling in North Mexico and shipping into the US. So it's not to say I'd debunk that myth, but I would answer that question about the whole concept of onshoring. And I would conclude my statement by saying, supply chains are built on two things, efficiency and economics. And those two things, contrary to what maybe some people say, have stood the test of time really well. They move product efficiently from A to B at the most economic rate from the best people that make them to the people that want to consume them and buy them. And that is very hard to unravel. And when you do unravel your supply chain, it's actually quite complicated because the secondary suppliers, might actually be getting goods from China anyway. So it's a complex topic. There hasn't been much change. There is some onshoring taking place, and rather effectively, no doubt, in northern Mexico as well.
Yes, and how do you connect the concept of de-risking supply chain, production, manufacturing, diversification, the concept of China plus X, which has also been elaborated by DHL in one of its papers. Is that something that is happening, if it's not nearly nearshoring, but basically companies are trying to de-risk their supply chain for various reasons?
Yeah. I think that doesn't necessarily talk to the nearshoring comment. It's, I would call, separate but linked. All companies who have had any degree, it's just human nature, of supply chain interruption, whether it be the Red Sea, whether it be Iceland, whether it be this, that, or the other, will want to de-risk their supply chains. The logistics experts don't want to upset the marketing and commercial folk by having the product late and not being able to be sold on time, and so on and so forth. So the de-risking concept is alive and well. What it in fact means is it might mean one more production site in Asia, which might be Vietnam or Malaysia or Indonesia. It might be the movement of some components that relate to the things they're making closer to the area of consumption, but a veneer, just a slice, a thin slice of the product that they make may be brought closer to home, but inconsequential in the scheme of things. And checking supplier reliability and all sorts of checks and balances that says they're dealing with the right supplier in Asia, and those suppliers are not going to let them down. I would point out that logistics companies like us, everyone said it's quite interesting. Everyone said there was a cartoon in the Economist even that suggested that everyone making the vaccines would do a great job, and it would be the logistics companies that couldn't deliver them. It was not quite the opposite, because everyone did a great job. But I can, share with your listeners that we moved 4 billion vaccines at a success rate of over 99%. So this, during the pandemic, this was a demand shock, the pressure being put on logistics companies, and they perform very well. And that relates to your point about de-risking. By and large, every day, logistics companies are delivering the goods from A to B on even existing supply chains. But people do want reliability, obviously. And when spontaneous things come up like the Red Sea crisis, people will move from maybe sea to air, or air to air express even. I remember during the COVID, and it may be interesting to share this with you, one of our customers said, I want everything up to 500 kilos to move by DHL Express. I don't care what. Now, they were slightly more exotic destinations, harder to get to, but it was nevertheless the point that things that didn't move by DHL Express in the past were just put on the list that they will move by DHL Express. And, that supply chain then was de-risked, if you will.
Yes, and whether it is headwinds or tailwinds, as a logistician, how do you realign, redesign your customers' need for moving their goods from any part of the world to any part?
Yeah, well, that is what we've done since time immemorial, since 1969, when trade was first flowing between San Francisco and Hawaii, and then, from everywhere in the world to everywhere in the world. And you can imagine we have so many data points and forecasting tools that allow us to know which way trade is flowing. But over the last 6 or 9 months, we've seen more shifts in the movement of things. One example I can give you is that, broadly speaking, there was an enormous amount of laptops that were produced in China, sent to the US. Before Liberation Day, in fact, a week or 2 or 3 before, that started shifting to production sites in Vietnam. And if I drew a line graph, it would be very quick for you to see exactly what I meant, how basically overnight laptop production shifted from China to Vietnam. And the consequence of that was that we had to put our find new aircraft tails to put into Vietnam to make sure we had the capacity to satisfy the burgeoning demand upon that capacity. So we see flows move every day. The standard deviation of movement of our flows is higher now than it's ever been, but it's not something that our operational people can contend with, either on the downside of that with China to US and how de minimis has maybe impacted there, and on the upside of China to Asia, China to MENA, China to Europe, where China in September grew, despite the US number, at 8%. And China to Africa. I read recently a Bloomberg report, in fact, to whom I've just been talking this morning, and the line a month ago was China is pouring its exports into Africa, 26% growth. So you can start to hear some of the growth areas that I'm referring to, which are in the sense that China are growing at 8% in September, are rather more than compensating for the down trade on the US lane.
Since we are talking about the logistics, Pearson, do you see that there is going to be, the peak season is already around the corner? Do you see a capacity crunch, or is there going to be a lack of capacity for the air freight given the kind of demand that you see? Or is that going to be a non-peak season for 2025?
No, well, I've been in the company since 1986, and I've never seen anything but a hockey stick in quarter four. Sometimes the hockey stick is lying on a hockey shoe on the floor, and it's somewhat elevated, and sometimes it's in someone's hands, and it's absolutely vertical, and it's a big peak season. We are expecting a peak season. I've never seen quarter four not deliver a peak season. It's part of the industry cycle. Capacity is getting tighter. Rates are going up. We're having to get ourselves in a position where we're taking either, the odd charter here or there. It'll be less than last year because we've got ourselves in a very good position in terms of our own capacity, and we've taken delivery of 2 brand new 777s recently. So we're in good shape to offer a high quality of service, particularly on the heavy lanes from Asia to Europe and typically Asia to the US. We're anticipating that, and the industry narrative and dialogue in the industry press is absolutely suggesting, it's already come. And anyone thinking that there's lots of empty planes out there and capacity will be, free and full for people to take. Anyone knowing the industry wouldn't be saying that anymore. Let me say it like that.
And you're already flying the 777-300 ERSF, which is the big twin on the Asia Pacific already.
We're flying them on different lanes, up to Leipzig and so on and so forth. And the interoperability of these aircraft is quite high. We didn't, pre-COVID, the network change requests, as we call them, the NCRs, there might have been one a month to change one aircraft on one route. Sometimes now there's 4 a week. So we've got a very fixed flex aviation fleet. I call it the perfect aviation network, which allows us to accommodate all the changes.
Pearson, given that the de minimis has been taken off by the US, where do you see the cross-border e-commerce shipment? Do you see the markets already shifting from the TikToks and Shemu and Shein from the US to other regions?
Yeah, so it's an interesting topic, de minimis. Let me categorize it a little bit. De minimis from China and Hong Kong, we know that went away in May 1 approximately. De minimis from the world, 219 other countries, we know that went away on August 29. So you've got the 2 geographical blocks, and then you've got to say, well, de minimis for B2C or de minimis for B2B? If you're moving garden hosepipe fittings into the US from China, well, I can assure you that is probably not going anymore, because that will become rather an expensive garden hosepipe fitting. But that was at a time when tariffs were 145 or 100%. Now, they've come down since then, so the ability for e-commerce to go into the US is still there. Then if we say non-China and Hong Kong to US, B2B and B2C, we've seen very little impact on B2B flows under 800 into the US. Why? This is a part for an aircraft from Siemens or from anyone else that is maybe an aircraft on ground, vehicle off-road, or a production line down, and that part needs to get in there. It's valued at $400, $500. It's going to have a duty, if it comes from Europe, of 15%, $1.32 fee for customs and border, 17 here. So it's not something that any logistics manager would quibble about in terms of moving a B2B thing into the US. Now, in the case of, let's say, the UK, 10% margin country, high fashion into the US, also quite unaffected. The merchant may lower their price a little bit. The duty needs to be paid, but some of the average order values are 1,000, 2,000, 3,000 euros, and some of them are under 800 also, which is what we're talking about now, obviously, and the goods still flow. What will stop is some of the lower value, more affordable fashion items. I'm talking 10, 20, 30, 40, 50, $60 of dresses and t-shirts and jeans and so on, where they will be impacted by the duty, and we may see some slowdown. It's a little bit too early to tell really the impact on non-China de minimis change. They've had a long holiday over the last week. In 2 or 3 weeks or so, we'll be able to get a picture, but it has been rather moderate thus far. But I think that gives, again, your viewers a good perspective on the categorization of China and rest of the world. It all relates to what the duty is in the country it's coming from. That impacts the duty they will now pay for a less than 800 shipment. And then you've got to think about a part for an important vessel, aircraft, production line that won't be affected by this, and maybe a low value piece of product from a merchant that can easily be afforded by buying locally in the US.
What is the potential that you see in the AI-related application and the data centers coming up, the proliferation of AI tools in our life? Do you see semiconductors, fab industry-related cargo on your planes, particularly on the express side, as well as for a DHL as a group in terms of a product category?
Oh, absolutely. I mean, in our electronics and electrical section, the growth is, especially out of a country like Malaysia, the growth is very strong. So there's undoubtedly the range of full products there. Data center moves and such things like that, the hyperscalers and the activity going on in that field is enormous, and almost every day now. So our activity and our supply chain footprint from, express on one end to sea and air freight in the middle to big box and small box warehousing on the right-hand side plays into data center moves. It's undoubtedly part of the freight, rather valuable freight on our aircraft every night. It's from some countries more than others. Malaysia would be a good example of that.
Pearson, I also looked at the growth leaders in your report, and there are India, Vietnam, Indonesia, and the Philippines, all of them in the Asia region. Then the standout region, of which you already mentioned about the Sub-Sahara and the Asia. We have at the end of this month the ASEAN summit in Kuala Lumpur. President Trump is expected to join. Where do you see Southeast Asia nations' economies in the global pecking order in terms of regional powerhouses of global trade? And do you see there is much more of, even though they are cross-border, but then they're within a specific region, there is more movement of goods on trade within the regions?
Yeah, so while I clap those countries into the room, take my hat off to them. Firstly, ASEAN, as a trading bloc, it's the most successful and the longest standing trading bloc there is. There continues to be all sorts of good examples of how those countries are trading with others. There is no doubt in my mind that Malaysia and Philippines is not Southeast Asia, but Malaysia and Thailand, Indonesia will be beneficiaries of that. We chose Malaysia to a point because of the linkage they have with you just mentioned it with that body, official body for the next period of time. We have over 500 SMEs registered to hear about how we can help them grow. And I think the story is very positive. Right now there is a lot of volume flowing from China into Asia. We'll have to keep an eye on the prices and the effect of that heavy flows into Asia. But Asia are consuming well and manufacturing well, Southeast Asia as much as anywhere else. And I think the prognosis, and these are some of our GT20 countries, those countries which have been forecasted by the WTO, the IMF, and NY Stern, our partnership with NYU Stern, to grow faster over the next 5 years on an axis of speed and scale. So let me be clear, there are 6 or 7 of them in Asia that are statistically forecasted to grow fast. Our job is to make sure our capability gaps are zero. That could be cold chain technology, that could be additional warehousing. Our leadership is strong. Our great place to work position is number 1. In all those markets, we're either great place to work number 1, 2, or 3. So we're in a very strong position to make sure we get more than our fair market share of growth from those countries listed in the GT20 categorization, who are those that are benefiting from different aspects of economic change that should make them grow faster than the other 200 and 199 countries we are in.
You know, I've seen some of your previous interviews, and when you talk about India, India is part of one of the growth regions, standout regions, or the countries. You've been quite bullish about India as probably a potential manufacturing powerhouse. You were in India, in Mumbai last week. What's your take on India's in terms of its pecking order in the global trade?
Yeah, well, you can see the smile coming to my face as you mentioned India there. You know, I'm a big fan, you know, but a big fan with statistical, you know, data to support that. You know, when I look at India's GDP, or when I look at India's PMI, or when I look at the foreign direct investment into India being the second of any country in the world other than the USA, the inward, the hygiene factors are pretty good. When I look at, and some of your viewers may disagree, when I look rather superficially at the national logistics policy and what in the space of 3 years that's managed to do, firstly, you know, putting that policy in is a force for good. So I take my hat off to you for that, or the administration for that, but getting it in place and getting some level of success there. When I go to India and I look at our new facility in Delhi, I can see, you know, the impact of the NLP celebrating its third birthday. I can imagine, and this is a very important comment, with all this trade stuff going on, that the activities maybe within the NLP or associated with it will be rather accelerated, because India are in a very good position to capitalize and benefit from the shifting sands of global trade. Highly intelligent workforce, generally speaking, a competitive cost position. The ability to get into India and out of India is good. So I think, you know, that if the policymakers and the administration continue to lessen any elements of bureaucracy and anything else, I can see nothing but success for India. And the first thing I always do is check whether our India numbers, and don't forget, we're a very strong group business in India with supply chain, with DHL Blue Dart in collaboration with Express, with Global Forwarding and Express. So we're a real 4D operation, 4 or 5D operation there, and a great place to work. It is one of our, you know, spotlight countries that we would never take our eye off. And whatever investment, and we released a 500 million euro investment statement not that long ago, I can't remember exactly when, that talks to the confidence and the long-term play that we have for India.
Pearson, earlier today you made DHL Group commits more than 300 million euros to accelerate growth in Africa. And this comes a few months after you made an announcement of 500 million for the Middle Eastern region in June, commitment for by 2030. What would be some of the top priorities when it comes to investment? Where will the investment go? Will that for infrastructure, information technology, AI, staffing? What are they?
If you're investing in a building, let's say, it speaks volumes of our business. It means we're growing. It means we have good people, and it means we have good quality. Otherwise, we wouldn't be growing. That 300 million investment and that 500 million investment talks to the growth. It also talks to the country that we're making that investment in. 300 million in Africa means Africa must be performing better than if we weren't needing to do that investment. So it talks to the strength of the economies, perhaps some success of the African Free Trade Agreement, and the extent to which Africa is firmly on the map for Chinese exporters, etc., etc. Otherwise, we wouldn't be cutting ribbons. We're out there cutting ribbons in India, in specifically. And, you know, we only spend money on a certain number of items in DHL. Aircraft, warehouses, distribution centers, gateways, service centers, technology, and courier vehicles. That 300 million is largely infrastructure and facility distribution center related. There is technology in there, and I'll come to that in a second. And that is facilitating the growth vectors that those facilities, by and large, where they're not just a head office or a new gateway in Côte d'Ivoire, that they're a purpose-built facility to satisfy the growth of one particular sector. Great example, life science and healthcare, now more commonly called health logistics, cold chain operations within these. So it's servicing the needs of something like that, servicing the needs of industrial projects, which is always heavy in Africa, servicing the needs of new energy, which is always heavy in Africa. So we're building the things that help us provide the capability to give comfort to the customer that we are their right logistics partner. And if Africa wasn't in the shape that it was, we wouldn't need to make those investments. Broadly speaking, our investments are grouped around P, Q, and G. They're either people, making sure our people are working in safe and first-class facilities. Quality, making sure we have distribution centers for life science and healthcare that produce quality exports and imports, and the maintenance of product within those cold chain warehouses, and ultimately then driving growth. And you can sort of bucketize those investments. But they are our meat and potatoes, CapEx spend. We spend $1.3 billion a year roughly for as long as I've been reporting on these things, and it typically comes and goes depending on whether we're building any big new hubs, which are large. But we've built or retrofitted or built new all our hubs. So now we've got the opportunity to really invest in those things that will drive growth. And your good memory about MENA investment and your comment about Africa is exactly an example of that.
Pearson, you're a 40-year-old veteran. You will complete 40 years as a logistician next year. What do you think is the biggest challenge for you as a logistician? What keeps you awake at night? Anything specific that what has changed over the last 40 years? We are living in the age of AI.
Well, firstly, I haven't been called Pearson since I was at boarding school when I was 7 years old. People tend to be called by their surname, not their second name. But anyway, I'm happy to be addressed like that. But it does make me laugh. No, I think, when you've got a good team, you can achieve anything. We are a great place to work. And this is not a flippant formula. Our formula in the focus strategy is P plus Q equals G. People and quality equals growth. And you say, okay, well, that's pretty simple. Well, no, it's not. It is simple, but there are 4 or 5 big things under P. Great place to work, our employee opinion score, the way we're authentically close to our front line. Okay, what about quality, John? The way we maintain our 96% transit time, the way we do NPS, NPA, Net Promoter Score, Net Promoter Approach. And what about sustainable growth? Well, the way we buy sustainable aviation fuel, the way we sell that to our customers. And if you're not keeping your customers through quality, I often say Mr. and Mrs. Quality are the best salespeople we have, then you won't be growing. So the only thing that keeps me awake at night is if anyone tries to think it's good to deviate from that strategy, which we've had in place from 2010, or if anyone thinks that the Accelerated Sustainable Growth Strategy 2030, which is a group strategy, which intertwines very nicely with focus, isn't the right thing to do and starts looking at different industries or different ideas, we need to quickly get them back on track and say, here's the recipe book. We know it works. We're the market leader in just about everywhere where we are, and we have a great set of people. And if we stick to our knitting, as we say in England, many of the phrases in England are interoperable with India, as you well know. If we stick to our knitting, we'll continue to be successful.
I think for anyone interested in global trade and thinks that from the consumption of news media and then thinking that global trade is all about gloom and doom, it is time that you take a look at the DHL Global Connectedness Tracker 2025 special update, and it gives you a clear vision about where the global trade is headed, and it is based on hardcore data and facts and figures. John Pearson, CEO of DHL Express, such a pleasure talking to you. Thank you so much for your time.
Always a pleasure, and happy to do it again anytime. Thank you. Have a great rest of week.
Thanks.